Hey guys, what's up? Welcome back to the Forex Chasers YouTube channel. Now guys, as you can see, today we're outside. I decided to just switch things up, and just before we get into what today's topic is, guys, if it's your first time, definitely subscribe so that you continue to get some more value added content. And if you're one of the family that are always here supporting us every single week, drop this video a like and let us know that we have added some value to your trading career. Now guys, we're gonna get straight into things. Today we're going to speak about how to protect your capital. Now, in this whole topic about how to protect your capital, I'm gonna go over basically the stuff that traders normally learn, things like using risk management and the like. And then as well as I'm going to touch on some psychology. Now, we do know that trading is more of a psychological game than anything else. And I guess it is important to want to kind of just try and be aware of yourself and I guess refine that aspect of your trading, refine the individual that you entrust to make those decisions. So guys, let's get into things. So we're going to speak about, first of all, guys, ways to protect your capital. Number one, we're going to go into the trading side of things, and that's obviously using things like appropriate risk management. Obviously employing different concepts and different tools, like trading with a minimum risk to reward ratio of 1:3. Obviously, we know we're risking 1% to make 3%. What that does for us is that even with a strategy that has a low win rate, for example, we win 3 out of every 10 trades, which is a 30% win rate, we can still be profitable just using the risk to reward ratio. Now, we're gonna get into some psychological stuff as well, which is what I absolutely love to get into. So I wanted to kill the trading out quickly so that we can touch on how to protect your capital using your mind and your psychology, guys. Now, obviously, we know that the markets are driven by two main psychological factors: fear and greed. Now, fear and greed are obviously emotions, emotional states, and those emotional states are obviously your body's response to the external environment. We know that we're human beings. We have a brain that's been built, and our brain has learned to do things. Our brain has kind of been designed in a way that we move away from fear and danger and harm and uncertainty more than anything else. And our brain loves certainty. And with this whole issue about basically our brain trying to avoid fear and all of that kind of stuff, guys, our brain obviously, or our makeup in general, has put things in place to protect us from feeling pain, from feeling fear. Obviously, fear's response, or the body is intention by giving you fear, is to move you away from the situation. And the whole idea, guys, with this whole thing, what the main aspect that I'm trying to actually convey to you guys is that as a trader, guys, we should kind of switch the game up a little bit. When our trades are in a loss, instead of feeling, normally what we feel is hope. We hope that our trade is going to come right, that things are going to kind of straighten themselves out, and that, yeah, maybe we'll end up in a profitable trade. And sometimes it's even worse off when we do get back into a profitable trade after hoping that this loss will come back. And it does, because the next time that we're in a drawdown, the next time that we're having this loss, our brain even reminds us that, remember, the last time you were in a loss, you hoped and hoped and hoped and it came right, so maybe hoping is the right thing. But what we should be doing as a trader is reversing that psychological game. When our trades are in a loss, that is when we should be cautious and feel that fear and kind of want to be partially out of our position because it's not going the way that we intended. And when our trades are in a profit, guys, when our trades are in a profit, what we normally feel is fear. We want to close out those trades. We don't want to lose out what the market has given us. We don't want to go back to break even, or whatever the case is. We feel that fear of holding this although the trade is winning. And that's when we should be hopeful, guys. Our trade is blue. Our trade is working out the way that we wanted it to work in. And so that's when we should be hopeful that the trade is positive. Let me add on to these positions and let me maximize on my gains. Now, remember, the whole idea of today's topic is basically how to protect your capital. Now, we're going to touch on something that is called win rate. Now, win rate is obviously how often a trader wins trades versus losing trades out of the total amount of trades that a trader would take. Now, a win rate obviously can be increased, can be decreased. Now, let's take a hypothetical example. Let's say we're taking a trade with a risk to reward ratio of 1:1. So we're risking 1% or we're risking 10 pips to make 10 pips, equal distance away from entry. Now, just looking at things, our trade has an equal probability of hitting both stops and both targets, just because the distance from our entry is exactly the same. Now, what happens if we increase our risk to reward ratio and start trading with a risk to reward ratio of 1:2? Now, what that does is that decreases the probability of us hitting our targets. Why? Because our targets are further away from our stops. If we look, maybe we're risking 10 pips to make 20 pips. So our stops are obviously closer to where we're entering, and so we kind of have a higher chance of losing this trade than winning. Though obviously, when we look at the overall probabilities, we have an opportunity to risk a specified amount and to make more than what we are risking. And so guys, when we are protecting our capital and using things like risk management, you'll find out that me that assumes that I'm a profitable trader that trades with a risk to reward ratio of 1:3, I lose so many trades. And that's not because I don't have an edge, that's not because I can't make money, that's just because of the probabilities of the system that I am using. And in the process, I am protecting my capital. Now, people use different ways of managing risk. Now guys, I'm gonna give you guys a tip on how to kind of manage your risk, especially if you're using a small account. Now, I know a lot of people don't have that $1,000 to deposit in their accounts to start trading and then focus on protecting that capital. Some people just have, for example, $100 or maybe even, let's just say $50, and they still want to protect this $50. Now, a different approach to risk management that I can give you, one quick tip before we round up this video guys, is that for your $50 account, what you want to do is that you want to treat your $50 account like, maybe let's just say that like your $50 account is a $500 account. What do I mean by that? I mean, let's think of a $500 account. If we're risking 1% of $500, that would be $5. So we can treat our $50 account like we're trading a $500 account. What I mean by that is, let's specify our risk and say we are risking $5 per trade. Now, obviously, it's going to take us a couple of trades. For example, if we lose 10 trades in a row, we've probably drowned our $50 account and we don't have that $50 anymore. But what that does is that it still gives you an opportunity to think about your trades in terms of percentages, to think about your trades in terms of managing risk. You're still managing risk. Obviously, that risk management is not good risk management because you're not trading a small percentage of your overall capital. But how can you do that with a small account size? It's impossible, guys. So you still need to find a way of managing yourself and still being able to keep risk intact, because there is no trader, there is no hedge fund, there is no successful anyone that participates in the financial markets that does not have risk management and asset protection, obviously capital protection, as one of the main pillars or main foundations of their trading strategy or of their market maneuvers or whatever the case is. So guys, I hope you enjoyed this video. I didn't want to stretch this video on too long, and I also didn't want to stress on to more of the technical aspects like the risk reward ratio, like the win rate. I really wanted to touch a lot on the psychological aspect and where we should be thinking as traders, because even the way that you think can be a method of protecting your capital. Guys, if you are the opposite and you are hopeful, you are one of those hopeful traders that adds on to losing positions, that is not protecting your capital. Now, I hope that you do see the connection that I was trying to make by showing you the two types of emotions that obviously drive the markets, and how you could still, just by managing yourself as an individual, protect your capital and make yourself a more efficient trader, a better trader. It just takes you, or rather, what I'd say is that it just requires you to do these things, these very small things, bit by bit. Take small steps, guys. The mind doesn't make big logical steps. The mind always makes the next logical step. The mind makes decisions making small leaps in ideas. And so when we look at someone else and we say that someone else is more creative, their mind made the next logical step. And because we are outside, we look at them and we are like, how did this person connect this with this? That's the same thing, guys. On your own, on yourself, by yourself, guys, I guess just take this approach with the mindset and allow yourself to make those small adjustments, because even those small adjustments add up over a long period of time, guys. You can develop yourself into the efficient trader that you want to be without the friction, without the difficulty of you having to make a lot of changes at one point in time. Start small, start with your psychology as well, guys. Psychology is something that you only develop as you trade, as you get experience from the markets. Only the markets can teach you about your own psychology and how you make decisions under a stressful environment or in a stressful environment, or maybe how you make decisions within an uncertain environment, because the environment of trading is uncertain. But guys, uncertainty, the environment, the whole idea of uncertainty, that's what births creativity. That's what births ingenuity. Being uncertain, guys, every leap that has happened in human history has happened because someone asked a question. It came from a place of uncertainty, of not knowing, and that's how the leap was made. And so even in the trading environment, as uncertain as this environment is, guys, we need to be able to train ourselves to be open-minded enough to understand that changes don't happen big, changes happen very small. But even those small changes that I make towards my trading career can make me the trader that I want to be. But anyway, guys, let's not digress too far. I hope that you actually got a lot of value from this video, guys. I decided to kind of speak my mind and actually just give you guys the things that I wished that a trader that had walked the walk gave me when I was still learning, guys. And I think that is what real value is. Real value comes from sharing an experience and sharing the solutions to those problems that you faced in your experiences. Now, guys, obviously drop this video a like, subscribe if you haven't, and share this video to someone that you feel like obviously needs to hear this talk. Otherwise, this is Tremaine, your FX Chasers mentor. Super awesome to have you guys here, and I'll see you guys in the future videos. Thanks a lot. Cheers.